Good evening, this is Giuseppe Basile. I'm the NSN. You can find at the blog FibonacciStalking.com. I also post regularly on Twitter using the @FibStalker nickname. Good evening, this video is part of my FibStalker newsletter and it's my FibStalker review on currencies. It's a video review, weekly video review in which I analyze and forecast four major pairs: the USD versus Japanese yen, the pound versus the USD dollar, the US dollar versus the Canadian dollar, and the Australian dollar versus the US dollar. These are all major components of the dollar index. Let's start from the US dollar versus Japanese yen. What you see on the screen is the weekly chart of this forex pair, and those who follow me know that the huge intervention of the Japanese central bank in this pair did not allow to follow and actually anticipate this huge move higher here. So at the moment we are we've been watching last week this measured move higher, and this level of support in the 190-120 area hit first again 96.41. Now there is the possibility that this move keeps going higher into the 98.60, as we said, or we can get a traditional retrace into the 93.80. To be very honest with you, and I say that on in last week's video as well, this huge intervention and strong intervention from the central banks does not allow my methods to work nicely on this pair, and we had extension moves then translating back into traditional moves, and that's not very common. So what I can say here is that if we get to 93.80 area and we never dip below 93 level, then we can actually continue higher. But this could only be as soon as this could actually reverse as soon as the weakness in the US dollar starts again. So moving to the pound versus the US dollar, I want to show you something on the longer term time frame here, the weekly time frame, and then we know that we have this resistance level in the 168.40 level, traced from these highs in 2008 to lows in 2009, and this has been respected. And on the other side we have longs as well, traced from the lows in 2009 to highs in 2009, and we had this 152.80 level that was respected three times in 2011 and then again beginning of 2012 and April 2012. But we have a very important development here, because price was actually moved swiftly lower in the last basically since the beginning of the year here, and we had last week price piercing the 148.64 level, and I consider this a very important development, because the longs that have been supporting price for 2011 and 2012 now were not able to support price anymore in this area. So this is a very important development. What could happen is that we could actually now see a retracement to the next level of resistance and short. We could come at 156 in the 156 area. Moving to the daily chart, we can actually see and identify a very clear line in the sand here. We had this resistance level in the 152.20, 152.10, and we can also have another trace that after observation could actually explain a little bit better the last move here. And price had resistance in this 120.52.10 area and hit target in 148.70 80 area here, and then we had this reaction higher. Now if we use the same anchor, we can actually identify a level, and if we move above this level, then we can say that this move lower has ended. So if we move above 152.10, we can say that this move has ended and the new move higher has started, and that's something very similar to what we got last week in the Australian dollar. So once this move on the downside will be ended, if price comes above 152.10, then we could start a new move higher into this 156 area of next resistance, where we should see price start moving lower again. Moving to the US dollar versus the Canadian dollar, starting from the weekly chart again. We have here a level of resistance that has been identified, tracing from highs to lows here, and that's the 105.70 area. And on the other side, a level of support was identified in the last few months of 2013, and it started working at the end of last few months of 2012, and it started working at the end of 2012, and then again at the beginning of 2013. And this level of support is the 098.50 area. This level had two levels of target, 101.50 and 103.10 here, and within this move higher we also had an inner move with support in the 099.60 area, which again hit the first and second target, which were very close to the other setup. Now we have two levels of support here. The first one, it's a weekly level of support from these lows to highs, and so far this level of support is holding. And if we move below 101.60 level, then we can state that this sequence of move higher has ended, and we could still have a retrace. Maybe to the 102.60 level, even higher, just retest the 103.40 area. But then we know that if we move below this 101.60 level, then this is ended, then we are starting a move lower that should bring price at least into the 99.90 area. But if we get a renewed weakness in the dollar, this could actually bring price of the Canadian dollar even lower. So I think there is a very good opportunity here for the Canadian dollar, because I don't think it's going to move straight down into this 199.90, but I think it's going to bounce higher before we get a move lower. So very important to monitor this pair. To conclude, the Australian dollar versus the US dollar, this is the weekly chart. On the weekly chart we have a very important, a clear level of resistance that was respected mid of 2012 here, and we have target above, and then market started so this is a flag market. The market is in this flag on the weekly chart, and we have an important level of support as well. This level of support is coming at a 101 basically, and when this level was tested, price started moving higher, and it's now at the it actually is at the all the way halfway back in 103.70 area, and actually it's piercing into this area. So that's a very signal of a very strong Australian dollar here. And if we go back to if we move to the daily here, and you can go back to my review last week, and I said that with price moving above 102, 80 level here, then we could have a retest of lows, or a retest of this low to high, and then move high, and that's exactly what we got here. The 102.10 level of area of support brought price into 103.50 level, and then in the 104.10 level the second target was hit. So at the moment there are two possible outcomes here. That is, it's a continuation higher in extensions, in which case we could see price back into the 103.60 area of support at the beginning of next week, and then price hit the 104.40 for stagnant, and then continue high in the extension target in 104.80 level here. But it's also possible that we get a full retracement here if we get a stronger start of the week for the dollar, so in which case we could go down into 103.10 and then a continuation higher. But this chart is actually bullish on the monthly, on the weekly, and also on the daily at the moment. So this is it for the FibStalker view on currencies for this week. I think there are very good opportunities on the Canadian dollar as well as the Australian dollar, and I wish you a very good trading week, and I look forward to see you on my blog. I usually post this chart with 10 to 15 days delay on my blog. If you want to receive them as soon as I send out the newsletter, just go to my website and subscribe to the newsletter. It's free, it takes only 10 seconds, and you can get a lot of setups in the futures, in the forex, and in stocks as well. Thank you very much for your attention. Bye bye.